Ladies and gentlemen, good day and welcome to the Meghmani Organics Q2FY24 earnings conference call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that the conference is being recorded. I now hand the conference over to Mr. Gagan Dixit from Elara Securities. Thank you, and over to you, sir.
Yes, thank you. Very good evening and warm welcome to everyone. It is our pleasure to be able to bring to you the management of Meghmani Organics Limited, led by Mr. Ankit Patel, Chairman and Managing Director, Mr. Gurjan Singh Sehel, Chief Financial Officer, and Mr. Nishant Vyas, Investor Relations. I would now hand over the conference to the Meghmani Organics management. Over to you.
Thank you, Gaganji. Good evening, everyone, and thank you for joining us on our second quarter's earnings call. We concluded our board meeting this afternoon. I believe you have got a chance to go through the financial results and investors' presentation uploaded on the stock exchanges and the website. Let me start by sharing a brief operation update for the quarter. This was yet another challenging quarter for the company, as the industry continued to be under pressure due to sharp price erosion, high channel inventory, and subdued global demand. Even the demand from developed economies were not encouraging due to high inflation and emerging geopolitical tension. This resulted in lower capacity utilization in both the segments. During the second 24, the company revenue stood at 374 crore, impacted by persisting demand slowdown globally due to high channel inventory and decline in prices across the industry. If I talk about the revenue mix, crop protection constitutes about 71% of the total revenue, and the remaining 29% comes from the pigment segment. EBITDA for the quarter stood at 15 crore, impacted by lower sales volume and lower price realization across the market. In the crop protection segment, the major cause for downtrend is on account of lower price realization and high channel inventory across the market. All these factors put together has led to lower capacity utilization, impacting our operational efficiency and profitability. Revenue and the EBITDA for the segment stood at 265 crore and 25 crore respectively. We are optimistic that once the situation starts stabilizing, we are well positioned to leverage our state-of-the-art infrastructure along with the backward integration. Also, the key raw materials which are used in crop protection are available locally, which will make us competitive in the global marketplace. In the pigments, the industry has been on downtrend since second quarter last year and is witnessing demand contraction globally, resulting into companies cutting down the inventory pipeline, which is further hampering the demand and causing the pricing pressure. We expect the trend to continue for the next 2 quarters. In the second quarter FY24, revenue and EBITDA from the segment stood at 109 crore with a 2.5 crore loss respectively. On the capex front, we are progressing in a calibrated manner, and we are optimistic that nano urea and titanium dioxide would start contributing meaningful from the next financial year. This would also help us make further inroads into the domestic market, increasing its contribution to our total revenue base, thus enabling us to strike a balance between both the markets. To conclude, this is a one-off year, and once the overall situation stabilizes, we have all the enablers to regain our normal double-digit growth trajectory, which we had demonstrated throughout all these years. As a management, we are working on navigating this tough time by proactively undertaking cost control measures, clearing the high price inventory, optimizing the working capital utilization, and enhancing the cash conversion cycle to maintain our balance sheet strength. Lastly, I would like to reiterate that our long-term growth prospect remains intact. Given our state-of-the-art infrastructure, plant compatibility, wider product range, and geographical reach, which will help Meghmani Organics to command sustainable long-term position. With this, I hand over the call to the moderator to open the floor for the questions and answers. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to only use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Rahul Veera from Abacus. Please go ahead.
Hi, Ankit. Hello, Charles, sir. Question from my side. Sir, what you understand in terms of the prices of 2,4-D bipentrin, can you just give me the current price going on?
Yes, all right. Now, currently the prices have bottomed out completely. I would say not just one or two products, but across all the product range.
Okay.
Currently, 2,4-D price would range in the range of about $1.9 to $2 range.
Okay.
And bipentrin price is somewhere in the range of nearly $20.
Okay. Okay. And lambda, sir?
Lambda is somewhere in the range of about $16. $16.
Sure. And has the plant for titanium dioxide stabilized?
I'm sorry, can you repeat your question?
The titanium dioxide plant, has we got the stabilization volumes now?
Yes. Now the titanium dioxide plant is on the last stage of the stabilization. We hope to stabilize the plant completely by this quarter end. And by this quarter end, we are also starting the captive power plant, captive cogeneration power plant. So I think both the things will align together, and from the fourth quarter onwards, I think slowly, gradually, the revenue will start. So we hope that we will get full next year for the titanium dioxide as a business.
Sure. So the volume of take that we are targeting would be like close to 12,000 tons next year?
You can say that somewhere if we are able to run in the range of about 75-80% capacity, then yes, nearly 12,000 tons. Yes, you can say that.
Sure. And so nano urea, will we be able to start for this Kharif season or directly it will be the next Rabi season?
So we plan to commission somewhere in the end of fourth quarter. Let's say by end of March, we plan to commission the nano urea plant. So we will have the Kharif season for the next financial year, for sure.
Okay. Fair point, sir. I'll come back in the queue, sir. Thank you so much, Ankit.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. So, we were listening to the phone call of one of the formulation players, one of the large formulation players in the industry, and they were indicating that the prices continue to be in the downtrend. But as you were saying, pricing seems to have bottomed out. So, have the prices declined even in the month of October compared to, let's say, September for some of the products?
Ankit bhai, the thing is, We are more into technical, which is B2B. And the company...
No, I'm not talking about technical. They were talking about technical only.
No. Technical product is completely bottomed out. It is not going down any further, for sure.
Okay.
Maybe 1 or 2% here and there. Otherwise, it is completely bottomed out. In fact, at this cost, even the Chinese players are losing money.
Okay. We are also hearing that a lot of Chinese chemical companies are making losses, significant losses.
Yeah. So everyone knows in the industry that even Chinese companies are not running at full capacity because the global destocking of inventory is going on and there is a pressure from the demand point of view. So these two factors are creating a major pricing pressure which is going on. So it has already bottomed out. Even in China, now people are not running the plant if the prices are going below this level. So they are shutting down the plant beyond certain limit.
And the other issue was on demand. We have seen a lot of global agrochemical companies, revising their outlook for the current year downwards. And some of them are expecting that the situation to continue in the first half of next year as well. So what is your view on how the demand is expected to revive going forward?
So you're correct, Ankit bhai. What global companies are giving the forecast is correct. We have been moving in the market. We are also getting the similar feedback that somewhere till the first quarter end of as far as the calendar year concerned. So for us, the last quarter means up to March end, there will be some pressure for sure. We see the improvement taking place somewhere from April onwards. So this financial year will be definitely under pressure.
Sure. So, one other thing which the industry is currently facing is, lot of not just the competition from Chinese players, but in domestic market also a lot of expansion has taken place over the past 3-4 years. A lot of capacity has come in. So so many people are expecting that demand is even after demand comes back, the supply is expected to remain higher compared to what it was a year or 2 years back. So this is expected to lead to pressure on pricing. So what are your views on the same?
Yes, there has been some capacity expansion across few of the products, which is beyond the demand limit. And once the market improves, even after that, there will be some difficulties to utilize the plant at full capacity for those products. So there will be some pressure for sure. But this is not across all the products. I would say this is across few products. And in those products, this kind of situation will, where people need to reduce the capacity or switch to some other product or may shut down the plant, something like that.
Okay. Because some of our large products like Lambda and Bifenthrin have seen significant capacity additions or coming online. Let's say have already come online or expected to come online in the next near to medium term.
In fact, when the time was good, when the prices were very high, there were a lot of people which started manufacturing this product. And today, when the prices have come down, many of the companies have already stopped manufacturing this product already. So I would say this is a cleaning year where companies are not having a long-term vision will go out of the product or the market. So we like this kind of cleaning year where non-regulated or non-vision-oriented companies will go out of the market. or with the less backward integration companies will go out of the market. In the case of Meghmani, we are well positioned with the backward integration. So we feel that we'll have a strong future for many of our products.
Okay. Thank you, and wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Niharika Jain from Equities Investment. Please go ahead.
Hi. Thank you for the opportunity. I just want to clarify one thing.
Niharika ma'am, can you please come closer to this handset?
Hello, am I audible?
Yes ma'am.
Yes, we can hear you.
Yeah. So have you cleared out the high price inventory in quarter 2, or we are still carrying some for quarter 3?
Niharika ji, as a Meghmani, we have cleared out, I would say more than 90% of our high price inventory. I would say, you can say almost clear. So now whatever new production is happening with the new raw material prices.
Okay. And on the nano urea front, how is the on-ground acceptability of the product? Like, are the farmers using it, or the feedback from them?
Sure. So from the nano urea point of view, this is a new concept of fertilizer. So lot of field activity has to be taken, one needs to do. So as a company, as a Meghmani, we have already started field activity, demonstrating the product, showing the field trial in different markets. So the acceptability will take some time for sure, but once it will be accepted by the farmer, it will be a permanent kind of a thing. So both IFFCO, Meghmani, everyone is doing a lot of field activity. And I think you might have heard the radio advertisement where our Prime Minister, Mr. Narendra Modi himself, promoting the nano urea as a product. So, so slowly, gradually, with proper knowledge, proper application, the farmers are getting the right result. But if they are using the product without any proper knowledge or without any proper application, then the results are not up to the mark. So that kind of training and adaptability is being given to the farmer in the field. So it is I would say, little long journey, but in the future definitely it will happen.
Yeah, because we were reading some articles which said the yields are not very good with nano urea, and hence the farmers are not very willing to kind of experiment on their crops with this new product. So
yeah. So initially what happened when the IFFCO started selling this product, they were not doing the concept marketing. They tried to link the product with the regular urea to show the sales. So it was more of a push sale rather than pull sale. And this feedback we have been discussing regularly to IFFCO sales and marketing team, our team, and both the companies are working very hard and demonstrating the field activity down the line to the farmer. In fact, IFFCO has conducted more than 1100 trials, so showing the results are positive in different crops. So with the right application, definitely the results are good.
And what kind of margins are we anticipating, like, to make on nano urea for us? Any kind of working if we have done?
It is going to be somewhere in the range of about 17 to 19%.
Okay, 17 to 19%. And on the pigment business, considering that we have cleared out our inventory and everything, so do we feel that EBITDA pattern at least would be positive in quarter 3?
So corrective action has been taken for the pigment division. The old inventory is already clear, and as of now, the demand is still under pressure. So we feel that the demand will continue under pressure for next 1 or 2 quarters for sure. So the prices are not going to improve, but at the same time, the EBITDA margin slowly, gradually will improve from the next quarter onwards.
Okay. And on the TiO2 front, titanium dioxide, so we were planning to manufacture NRT's grade first. So do we have some tie-ups already, or are we in talks with some customers, because we are going to start selling in quarter 4? So do we have some concrete customers in hand?
As far as the titanium dioxide market is concerned, the application in the market is way, way big. And we have been in touch with different companies as far as the product marketing is concerned. So sales point of view, we don't see much pressure in the titanium dioxide. And as and when we'll start getting the approval from different customers, our customer base will increase.
So basically, the stabilization is done from our part, and it is just the customer approval that is pending. Like, what stage are we in exactly? For TiO2?
We are at the stage of plant stabilization right now, production stabilization.
And once it stabilizes, then we are going to start with the approval process from customers.
Approval process we have already started partly. So it is not that we have not started, because with the small production which is going on in the trial production, we have already started the approval process. So that is going on parallelly.
And are we confident that we are going to stabilize the plant this quarter? Because I think we were expecting that at least by end of quarter 2 also it might stabilize. So
these are all chemical plants, so there will be different troubles. And for us also, it's a new product, new technology, so we are facing different challenges. But looking at the current situation, we are quite hopeful that in this quarter the plant will stabilize.
Okay. Okay, thank you. That's all it from me.
Thank you very much.
Thank you. The next question is from the line of Yes Dedia from Max Capital. Please go ahead.
Thanks for the opportunity. I just wanted to know the volume makeup for crop protection for international and domestic customers.
What is the breakup between the sales of domestic and export?
Yes, volume breakup.
Volume breakup. In terms of revenue breakup, I can tell you the revenue is almost 71% is the export and 29% is the domestic.
Okay. So this is revenue in terms of final crore, but I just wanted to know the volume breakup. So in order to understand whether the domestic volume has grown up or not.
Yes, it could be. As of now, I don't have
volume as compared to previous year, it definitely has gone up because domestic sale is almost at par with last year, while the prices have gone down. But normally in the domestic market, we are selling in the brand which is in a smaller size. So in that case, this is not directly comparable with the export, where we are exporting the technical and bulk volume.
Okay. And I just wanted to know if there are any fixed control cost measures that are specifically coming for next second half.
Yes, cost control.
Yeah, definitely. We have been taking cost control measures across both the segments and across all the plants. So that is going on. Because of that only, you can say that there has been reduction in the loss in the second quarter, and from the third quarter onwards, we see things improving slowly, gradually.
So can you quantify any incremental benefit which is going to happen in half two?
Yes, it will difficult to predict in current market situation when the dynamics are not favorable. I would say it is difficult at this stage to predict.
Okay, no problem. That's it for me.
Thank you.
Thank you. The next question is from the line of Raghav Sumi, an individual investor. Please go ahead. Raghav?
Am I audible?
Yes, sir. Please go ahead.
Yeah. So my question, hi, Angela. So my question, as you have already addressed that 90% of the high cost inventory has.
The impact of high cost inventory has already been taken in first quarter, which was almost 48 crore.
Okay. So going forward, what type of margins we can envisage in agrochemicals in H2?
Raghavji, as I mentioned, it is difficult to predict the margins in the second quarter. But on an average, if you see the agrochemical as an industry in the past, everyone was making the margin in the range of about 15 to 18% on an average. So once things goes back to the normal, which I predict somewhere in the next year, then slowly, gradually, industry margin will reach to that level.
Okay. And third question is regarding the resignation. So this is in a normal course of business. I think Mr. Mehta has resigned, right?
Mr. Shalin Mehta, as an independent director, has resigned from the board because of this not able to attend the board meeting on regular basis, as well as because of his personal reason. So that is the reason he has resigned from the board.
I'll see in the question here.
Thank you.
Thank you.
Ladies and gentlemen, you may press star and one to ask a question. A reminder to all the participants, you may press star and one to ask a question. The next question is from the line of Raghav Sumi, an individual investor. Please go ahead.
Sure. I'll just start the question. So, sir, my last question is on the level of receivables.
Receivables, okay.
Yeah. So what is the thickness of these receivables?
So receivables, you also, when the market dynamics are tight, difficult, the receivable also get delayed little bit. So as of now, if we look at our outstanding days, then it is in the range of somewhere 100 to 110 days.
And previously, like in FY22, FY23, like it is
Less than 100 days.
right?
It used to be between 90 to 100 days. So from there, it has increased to 100 to 110 days.
Perfect. Thank you, sir.
Thank you.
Thank you. A reminder to all the participants, you may press star and one to ask a question. The next question is from the line of Akshada Dev from Viva Commercial Limited. Please go ahead.
Yeah, hi. I just wanted to know what are the capex numbers that we've done so far in the year and what we would be ending FY24 and FY25 by.
Can you repeat your question?
Yeah. I just wanted to know about the capex trajectory for this year as well as the next year. How much has been already done, how much is planned, and what would be the capex or slash maintenance capex for next year.
Okay. As far as capex is concerned, looking into the current market scenario, so we had the capex plan which we have put on hold. And just to give you example, in agro, for phase 2, we were planning to have expansion, but looking into current market scenario, so that is put on hold. Current capex which is going on is on Kilburn Chemical around titanium dioxide, where we have completed phase 1, and we have spent 275 crore. And as far as cogeneration power plant is concerned, so we will be spending around 110 crore, and that will be completed in this quarter. And another is Meghmani Crop Nutrition Limited, so that project is going on. So where total capex is 150, and by March we should be spending almost 75 crore.
Okay. So out of the titanium dioxide, 275 crores is already spent.
Yes.
And for the cogeneration also, 110 crores is already spent.
Around 100 we have already spent, so balance is around 10-12 crore.
Okay. And do you have any maintenance capex coming up next year?
Sustenance capex remains around 10 to 15 crore. Is that one? Routine maintenance capex.
Okay. And for the capacity that you're coming up for the dioxide plant, the titanium dioxide plant, which if you believe 12,000 tons can be achieved next year at 75 to 80% capacity, what are the revenue numbers that you believe can happen from this specific plant at this capacity?
So we believe with that kind of capacity, we should be able to generate about 225 to 250 crore revenue. Looking at the current market pricing situation.
Okay. And would you be maintaining your margins as well for the capacity?
So I think it is little early to predict because currently the market dynamics are under pressure, so the margins are also under pressure. So we hope that this being the domestic product and the demand increasing in the paint segment, and the next season, next year, we hope the dynamics should improve. The margins will be improving parallelly.
Okay. That's all from my side. Thank you.
Thank you very much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Gagan Dixit. Please go ahead, sir.
Yeah. Sir, so regarding your expectation of the recovery from FY25, so where do you see the recovery first will come, whether it's agrochem or more on the pigment side, sir?
I would say more from the agrochemical side because the consumption in the different market, wherever the channel inventory was lying, that consumption is started happening. And we believe that in the world, every country is talking about the food security. So the agrochemicals, crop protection segment consumption is going to be there for sure once the channel inventory gets clear. So we feel that that market will improve in the next financial year first.
Okay, sir. And what about this pigment business? I mean, do you think that maybe normalization will take further, might be FY26, and what's the reason for this delay in the recovery in this side, sir?
So the pigment business, as far as the profitability is concerned, we are very confident that in the next financial year it will not be in red. So for sure, that is what we predict in the pigment division. But as far as the demand is concerned, I think it will be somewhere from the second quarter in the next financial year.
And do you see, sir, any consolidation especially in the pigment side? Because I see a commentary from the other companies also that they expect more than 1 year of delay of the normalization. So might be some global some consolidation or some closures might be that something you foresee that ultimately I think will benefit you after 1 year might be?
So we have been waiting for that moment already, because this kind of situation is going on since little more time. So we thought this consolidation or closing down of certain units will happen. But so far as the situation is concerned, it is difficult, and there is a more pressure from the domestic player, I would say. Domestic unorganized player. But even at this price, they are also under huge pressure, huge loss, I would say. And they also want market to improve, price to improve, to make a reasonable profit margin.
And I think, sir, crude oil is also not in favor, so might be the basic raw material. So
correct. So the crude oil is not in favor. Basic chemical prices have also not gone down to that level where our product prices have gone down. So this kind of pressure is there. As I mentioned, once the situation normalizes, then only this will improve.
Okay, sir. That's from my side.
Thank you.
Thank you.
Ladies and gentlemen, you may press star and 1 to ask a question. As there are no further participants in the question queue, I now hand the conference over to management for closing comments.
On behalf of the management, we thank you for joining us today. We appreciate your trust and support on us. With this, we hope that we have been able to address most of your queries. In case of further queries, you may reach out to Mr. G.S. Chahal or Nishant Vyas, and we will connect with you offline. Thank you very much.
Yeah. Thank you, sir. Happy Diwali.
Happy Diwali in advance to everyone. Thank you.
Yeah.
Thank you. On behalf of Elara Securities Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.